The coupon for a bond is calculated as a percentage of.
So it's not showing me any questions.
Oh, it's that. Hold on. Let me go back.
I see the bank that someone just got an 81, but that's all I see.
Okay, let me go back and try again here. Boom, boom, boom. Share. How about now? You see the question now?
I do. Okay. A coupon for a bond is calculated as a percentage of well, it's par value. Is it $1,000?
Indeed, it is.
It's safe, right?
Yeah, and remember, if interest rates go up, the bond
Yeah,
prices go
bond
down.
prices go down.
Inverse relationship. What is par value 100? Not a bond. What is 100 par value for?
Oh, is it a stock?
A preferred stock,
A
indeed.
preferred stock. Okay.
Preferred
Do I
stock.
need to know that? Like
Yes,
$100?
you do. You do.
Oh,
Because remember, they're going to give you percentages, and then you'd need to be able to figure out, is that 6% of 100 in a preferred stock, which would be $6? Is that 6% of 1,000, which would
oh, interesting. Okay,
$1?
so preferred.
Yeah, 100 for preferred stock.
Okay, got it. Perfect. As
As
partic-
participants in a firm commitment underwriting, the underwriters know.
Hmm. Is it D that they're acting as principals?
That's indeed right. If this is a firm commitment underwriting, like Facebook was a firm commitment underwriting led by Morgan Stanley at 38. As far
Okay.
as Facebook is concerned, that stock is sold at 38. We're
Okay.
acting as a dealer or principal. You're not buying the stock from the issuer, you're buying it from the syndicate. The most recent example that a lot of banks still have these bonds on their balance sheet was the underwriting syndicate that was led to sell bonds for the takeover of Twitter. And about $10 billion worth of those bonds were offered, but not all of them got sold. So that means they end up in inventory of those underwriters. But as contrasted best efforts, we're acting as an agent and we don't have any capital risk as a syndicate. A married couple have equal 50% ownership interest in a tenants in common account. If one part of the account dies, this is very testable.
Oh, okay. If one party of the account dies, what? Okay. Tenants in
Yeah,
common
you've got to be able to test to contrast tenants in common with joint,
and joint. Okay.
and this is not joint tenants with rights or survivorship. If it was,
It
it
would be the shares are distributed to
that's
the
right.
heirs.
Well,
Yeah.
yeah. So here, how you got to be a little tighter than that, right? So, uh, probate court, all the shares are distributed to the heirs. Tenants in common test question. There's a fractional interest, and not all the shares go to their estate or beneficiary.
Would it be C,
Yeah,
50%?
there you go. Right.
So
Right.
tenants in common, half.
Well, it doesn't have to be half. It could be 80,
Oh,
20, 70, 30. In tenants in common, there is fractional interest in the account. In this case,
okay.
stipulated the fractional interest was 50. Doesn't have
Okay.
to be 80, 20. In other words, if it was 80, 20, 20% of the, if the dead person owned the 20 would go to their estate or
But it goes
beneficiary.
to the estate.
You are, yeah. And that's very much the test point as contrasted to D, right? As
So
contrasted to D.
joint would be D that it goes to, no,
That's right. They said a married couple joint tenants with rights or survivorship,
the remaining party.
it would be D. Yeah.
And when would it be C? I mean, when would it be,
See,
sorry, A?
it's A, ownership and distribution. Well, that's if you die without, intestate.
Without having anything.
That's right.
Ownership interest.
The
Okay.
test question there would be, how do you avoid probate court? And that would be transfer on death. So, if a mom has transfer on death on her account and something happens to mom, it comes to me and it doesn't go through probate. ABC Growth Fund has reported average net assets of 120 million and expenses of 1.44. What
Ooh,
is the fund's expense ratio?
ooh, okay. I don't know how to do this, but let me try.
Yeah, remember what I always say? If you don't know how to do any math, do the division. And if you're not sure what to divide, take the first number and divide it by the second number. Uh, Kaplan's got a jerk here. So what we're asking is how much of that $120 million is getting eaten up in expenses?
Okay.
I kind of think of like the problem with managed money is, I always joke, the problem with monkeys harvest bananas is they eat the product, and here the product is money.
I'm gonna take a guess. What's the fund's expense ratio is like, hold on, 120.
Yeah, I don't think you're going to have to do this math on your SIE.
Okay.
You're going to have to do current yield, total return, adjustments for stock dividends and stock splits. Uh, what else am I
Is
missing?
this
Oh, tax and tax-free equivalent yields. Here we're going to take the 1.44. We're going to divide it by the 120, and we get 1.20.
and it's 1.20. Okay, that's what I was gonna guess A.
Yeah, yeah, and I don't think you're gonna have to do that math anyways, right? I
Okay.
would just know the expense ratio is an important part of comparing mutual, not the only thing. But everything else being equal, I would be interested in how efficient they are with the money. I kind of think like a charity. What's the expense ratio? How much
Yeah.
is actually going to what I'm, trying to do versus how much is getting eaten up in administrative costs? I would know the largest single expense to the mutual fund is the management fee.
Is the management fee, which is what, like
Yeah, it's really
20%?
no, not like you guys know. It's more like one
Oh,
public money.
1%?
The fees are much, much lower. Be careful. And the load is not an expense to the fund, that's to the client. And so what I would know in terms of mutual funds, in terms of expense things, is the maximum promotional expense that a no load fund could charge is 0.25, 1/4 of 1%. If we're charging a 12B1 fee of promotional expense, again, not part of managing money, just to print, brochures and marketing and pay.
1.25?
No, 0.25.
Oh, 0.25. Okay.
And then over the life, no more than 0.75%, 0.75. And then I would know that the maximum sales load in a mutual fund is 8.5%.
I knew that. 8.5. I knew that.
A customer purchased 100 shares of GHA common stock at 20. After a year, they sell those shares for 23. So their cost basis is 20 and their sales proceeds are 23. Over the past 2 years, GHI has paid 25-cent quarterly dividend. What is the total return? This is math that you can encounter on your SIE exam.
Okay. So they got a quarterly dividend. So they got $1 for the year. They
That's
have
right. In
2 years. So
two years,
they got
$2
$2.
there. Excellent.
Okay. And they made $3. So they made each
That's
year. So they
right.
made what? So how, yeah. I mean, I'm just kind of like, so
Yeah,
$2.
there you go. So there you go. You're on the right track. You're
Plus.
absolutely on the right track.
Now, would you do $3? Is it 3 and 3 for 2 years or no?
No, 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 no. Remember, because that's only once that we did that. We bought the stock. Our cost base is 20. We sold the stock for 23.
Did
Done.
you see our stock, Dean, recently? Yesterday was
No, dude, what'd you get?
170. You should
Wow.
buy it. Actually, I
Yeah,
can't give you any
you're
recommendations.
not supposed to. That's
I'm not supposed
yeah.
to.
But things are going well. That's great. That's great.
Things are going really well.
I always
Yeah.
did tell the story of this guy who had prayed Britney Spears to come sing happy birthday to him, and it was a red flag that he was willing to fly her in for 10 million. And this guy said, well, Steven Schwartzman was he paid the Stones. I go, yeah, but we all know where his money came from. It's not like it's suspicious where it came from. Right. So I said
Oh
there's a
my
difference
God.
between a guy we know where the money came from and a guy who where the hell does $10 million come from? All right. So then we made $5, and to make that $5,
Yeah.
we spent 20. And so our total
So
return would be
so it's 5.
uh, 5 divided by 20, 25%. And again, uh, that is math I would be prepared to do.
Okay, so you did 2 plus 3, and the
Yeah,
$3 is
the
because
$2
that's what
came
the
from
share
the,
is, $5, and the 20 is because that
yeah.
was what the share
I
was.
always say there's only two ways to make money from an investment, the income stream
Yep. And the
and
dividends.
price appreciation. So the income stream here is 2, price appreciation was 3. A trust that allows the grantor to modify the trust. Let me clean up here. Modify the trust in which of the following types?
It's B or D.
Right on.
Mm,
The key
is it
word is
B? Is it?
modify.
No,
Modify.
I know.
That's the key word. So
Is it irrevocable? I would think that you couldn't modify. So maybe D.
yeah, good job. Yeah, good job. Right. That's exactly right.
I
So
haven't seen this one on there. Will it be on there?
yeah, and I don't think so. I haven't had anybody on debrief tell me they've seen anything about
No, I haven't seen this in a while, but
yeah, and I think what they, here's where I think the question comes from. I think where the question comes from is that on the content outline that you and I spent some time on our last session,
oh yeah, we have to do that
it
on
does
Monday.
say that one of the investors you do business with is a trust account, but I don't think in the SIE it's going to be about the type of trust. It's going to just be as a broker, I need a copy of the trust agreement to see what is permitted or not permitted and that kind of thing, right? So I don't think this is something you'll see.
Yeah.
7, as long as it's not restricted by any documentation, margin trading is permissible in which of the following accounts?
Definitely not IRA.
That's right. Retirement plans got to be cash account.
Definitely not. Um,
Let me shrink this so you can see it. Do.
sorry. Yeah, so B and D are out. 1 and 4 fiduciary, 1 and 2, 1 and 3. I would think a partnership and corporation that you could do it
Yeah,
in.
right on. And then we do
Fiduciary doesn't, what is a fiduciary account? I don't
a
even know.
fiduciary account would be like, again, a trust account.
Oh, a trust account. Okay.
Yeah. And
No, I
even
wouldn't
then, I
think you
don't
could do
really like
margin
this
trading in
question.
there.
That's right. And then corporate account, we need a copy of the corporate charter to see it's specifically permitted for the corporation to borrow money. Same thing with a partnership. We need a copy of the partnership agreement to make sure that this is specifically permitted within that partnership agreement. Further, we need corporate resolution saying which corporate officer is authorized to trade, or which partnership resolution, what partner is authorized to trade. If left executed, a day order would automatically be canceled.
On the cancel date, on the first business day, I don't know what that means. On the close of the business day, on the last business day of June, if left unexecuted, a day order will automatically, I would think it would be on the day of.
Yeah, it's
Yeah,
on the
the
close of the
D. That's
business
a
day.
trick
That's right.
question.
That is a trick question. Now, remember the other one, if you don't add all orders are day orders, unless you tell me GTC. If you tell me GTC, good till cancel, then we leave it on the books until we get your execution. That would be for a limit order, right?
Yeah.
So, investors in exchange traded notes should understand that the primary risk associated with an exchange traded note is very much a test question.
ETNs they're sold on the secondary market.
They are.
I'm thinking it could be market risk.
It's not market risk, it's default risk because
Why default?
because a note is a debt instrument. And this is where a financial institution like Credit Suisse says, we don't want to spend the time and resources to set up a custodian and actually put the physical assets into a custodial place like an exchange trade
Oh,
fund. So instead, Allison, we're just going to agree to pay you whatever the market does. You lend us 100,000 exchange rate note. If the Dow goes up 20%, we owe you 120 grand. So you
okay.
have the risk now. In an ETF, you don't have that risk because they actually own the S&P 500. But if you actually have an ETN, then you're at risk where their Credit Suisse can make good on that promise.
What about an ETF? Default risk there?
No, ETFs are equity investments, right? They actually own the physical assets. So in an ETF, they actually have a custodian, JP Morgan, State Street, where they're depositing those assets. Right. So for the ETF to go to zero, every stock in the ETF would have to go to zero, like a stock.
So no default risk there.
That's exactly right. And this is a
Okay.
huge marketplace. PS Credit Suisse is no longer with us. So, a letter of intent may be backdated. Letter of intents are very, very testable. They're a way for a customer to get a quantity discount. And breakpoints are good, breakpoint sales are bad. So a letter of intent is a way to get that reduced sales charge, even though your initial investment isn't for that amount. If you say, Dean, I intend to come up with the amount of money I need to qualify for that reduced sales charge.
Yeah. 90 days.
Right on. And then the letter of
I can't
intent
imagine
itself,
you
very
doing
testable.
that. Yeah. 6 months.
Well, 13 months is the letter of intent is good for. So that's how long you have to come up with the money. And then you can backdate it 90 days. So B would have been the right answer. If I said a letter of intent is good for how long, the answer is B. If I say how long you can backdate it, the answer here is C.
You can. Yeah.
Electronic market centers designed primarily for institutional investors describes. I like this. This is very testable.
Electric market center designed primarily for describes. Okay. I don't know what the fourth market is.
It's
It
direct
could,
trading between institutions. That is the right answer. And this is a recognition test question. The largest electronic market center for institutional investors is Instinet, the
okay.
institutional network. This is where T. Rowe Price maybe wants to buy a block of, a million shares of Tesla, and Fidelity wants to buy. And they say, should we call Dean our broker and put him in the middle so he can charge us a commission markup or markdown? No. So
Okay. So, yeah.
Florida's market can best be characterized as a negotiated quote driven market. I really like this answer set, by the way, because all of these could have been the right answer to a different question.
Well, exchanges would be secondary.
That's right. And then the test question here is exchanges can best be characterized if this said, which best characterized as an auction order driven market, that would be B.
Ooh, okay.
B. If I say which of the following best that describes a negotiated quote driven market, you would be D. Right. So you got to be, you're right that B and D, all of these are secondary markets. But in terms of the, more particulars, more specificity, these secondary markets have characteristics, right? So exchanges are auction order driven. Over the counter markets are negotiated quote driven, bids and asks, bids and offers. And then the third market test question is listed securities traded over the counter. Listed securities over the counter. Let me just get out my annotation tool.
That's for the third market.
Yeah, let me just put these on here for you. Boom. Right. So if I ask you auction order driven market, yeah, that's the exchange. If I ask listed securities traded over the counter, and what that means is this is like Jeffries in Los Angeles. Jeffries is always open. They're not a member of the New York Stock Exchange. So they've never agreed to between 9:30 and 4 o'clock they're going to match buyers with sellers. You can call them and they'll give you a quote, a bid, or an ask to buy a listed. Listed means New York. So, I'm dating myself, Allison, but when I came into the business, the New York Stock Exchange says we get accused of having an antiquated business model from the 1792, but we must be doing something right. 80% of listed securities trade between 9:30 and 4 o'clock on the floor. Last figure I saw, it was only 8% of New York Stock Exchange stocks that are traded on New York. They're trading in the third market. And then this can best be characterized as a negotiated quote driven market. It's just an answer set. It's recognition. And boom, but I like the answer set. I like the question. This one, my thing I would put here is direct trading between institutions.
Okay, direct.
Yeah, institutional investors sometimes don't like to use intermediaries. But we have the owner of the New York Mets is a guy named Stevie Cohen, and he's a hedge fund guy, and he had a firm called SAC Capital. And
Yeah,
I thought,
I know his kids.
well, there you go. So that was amazing, legendary trader. But he had a huge position, multi-billion-dollar position in this stock,
Oh
and
yeah.
he was able to get rid of it without anybody knowing. And he was using the fourth market, where it's called dark pools. It makes sense he wouldn't do that on the New York because If you did on the New York, everybody'd see Stevie say, "Hey, look what Stevie's doing." So
Oh yeah,
not
he
only
was
do these
prohibited from trading.
yeah, but that's right. And not only do they sometimes like this forest market, they also like to trade anonymously, and we call those dark pools.
But he's back at it.
Oh, of course, yeah, his 2 year suspension is over. So yeah, his firm took the death penalty, and he said, "I'm not taking the death penalty." You're talking about, the SEC. He hired all the SEC's former guys, and they basically said to the
Fired everybody. That's what I
yeah,
heard. He
yeah.
literally fired every single person and started
Well,
over. So
well, why not? So, and isn't it funny that now he's spending less money and the Mets are doing better? I had a friend of mine who
yeah,
was an attorney, and he said, Dean, one of the questions he asked people when he's, hiring somebody is that they have an allowance. And I said, well, what's that question about? He goes, well, Dean, we only have limited resources here. And if somebody doesn't understand that, they just think they can spend all the money. And I was thinking of him when Stevie spending less money, getting better results than when he was just, throwing.
spending. I know it's like nuts. It's so funny.
I would know the classical balance sheet equation. A company's net worth belongs to, well, gee, this is even easier, I think, than I thought. I
Well,
thought it was
is the trick question? I was going to go with stockholders.
Yeah, well, wouldn't that be it? The company's net worth does belong to the stockholders.
Yeah.
The assets minus the liabilities equals net worth. I thought that's what they were going to ask us. They just told us the net worth. That's called shareholder equity. That's what we call that,
Yeah.
shareholder equity. All the following actions would cause the NAV of a mutual fund to increase, except, I like this one. It's kind of complicated. I think questions like this, I usually say the SEC is mainly recognition. But every once in a while you get this one. I think this is kind of a judgment question. I think this is kind of as tough as a question as you could encounter on your
So which ones would cause the NAV per share to increase?
yeah. So we got some bonds and some interest comes in.
Yeah.
NAV is the assets minus the liabilities equals net asset value. I think it's more important to know that we have to calculate that once per business day. We're always doing business based on the next calculation called forward pricing. Than this particular question. If you get this right, I'd probably give you, if I were a king, I'd give you 3 points because this is a tough one.
Well, B would make it increase.
That's the trick. That does not make it increase.
Really?
Yeah, because it's a wash, it's a trick, right? I have more money coming in, but I also have to divide by the new shares, right? So that
A
doesn't,
large number of investors make deposits in
yeah,
a
money comes
fund,
in, but so does the divisor, right? Because we got to issue new shares to them.
but the fund receiving dividends would make the mutual fund increase.
Yep, because now we got more money that we didn't have, right? If you receive dividends, I go back to your personal situation. What makes your net worth go up? Fund receives interest. You receive interest on your bonds. You put that in your checking account. You have an asset you didn't have. Your net worth goes up. Dividends you receive on stocks makes it go up. You pay off liabilities. That makes net worth go up. So what doesn't make your net worth go up is, for example, you get a loan for 20 grand. Your 20 grand in assets go up. So does what you owe, right? That's a wash. So trick. That's a trick. That's a real trick one.
This one's hard.
Yeah, that was a tough one. I told you. Tax advantage savings accounts, very testable for individuals with disabilities and their families are.
Tax savings accounts. Well, it's not A. I think
It,
it's B, able
it is,
accounts.
that is right on.
What is the UTMA again?
Very testable. That's a Uniform Transfer to Minors Act. Uniform Transfer to Minors Act. This is where I open up an account for my nephew who's a minor. It says Dean Tinney is custodian for Brian Tinney, UTMA, Arizona. The kid's tax ID number goes on that account. No margin on that account. And I can stipulate up to the age of 25 when my nephew gets the money. That's an
So UT
account, very testable.
and then
The able
UT.
account test question, the other test question that shows up on an able account is you need to know the age of the onset of the disability to qualify for an able account is 26.
You have to be under 26.
Disabled, that's right, before 26, right? So the disability. So I would know the 26.
Oh, okay. So you're able to open an account for someone and put money
Who
in
was
there.
disabled, yeah, maybe before 26.
Okay.
Your client Sophia retired from her job 5 years ago and placed all of the proceeds of her 401k into rollover IRA. So I would know there she had 60 days to do it. Doesn't sound like she had any problems. She got it done. If Sophia wishes to transfer the funds to an IRA at your broker dealer, which of the following statements would be true?
This is just recognition. Hold on.
Yeah, it is recognition.
Recognition. Is it transfer permit? I don't think it's permitted.
Yeah, yeah. As long as you're going institution to institution, there's no problem.
That's okay.
Yeah, it would be a
Oh,
problem if you wanted to get, physical custody again and do another rollover. So, right, there's no limit between going
oh,
from
there's no
custodian,
limit. Okay.
yeah, to go from custodian A to custodian B. I wouldn't worry about it. I'd worry about the 60 days. I would worry about the 10% penalty if Sophia gets this money before she's 59 and a half. I would know that required minimum distributions take place at 73. So
Yep.
stuff fly high. It's just mainly recognition.
Got it.
A penny stock, very much a test question.
Well, it's $5 or less. Listen. Unlisted. Unlisted or exchange listed. Ooh. Is it C? Not
Good
listed on
job.
the
Yeah.
US stock exchange?
Yeah. If it's a NASDAQ stock or it's a
Wow.
stock under five, it's not a penny stock. It's a non-NASDAQ stock under $5. Very testable. If what you have in your account is a penny stock, you will get a statement monthly instead of quarterly. That too is testable. If I'm soliciting you for a penny stock, then I have to get you to sign a suitability statement that says you understand you're buying a speculative, low priced security. That
Oh, wow.
suitability statement does not apply to an established customer. If you're an established customer, that means you bought three penny stocks from me in a 12-month period, or you've had funds with me for 12 months. Then we assume that you're consenting adult. So lots of questions about penny stock. This one, definition of a penny stock, monthly statements, if there's a penny stock in the account, suitability signed by the customer for the first three transactions that they understand they're buying a speculative low price security. And then again, you're no longer a new customer if you've done that, now established, or you've had funds with us for a year. The SEC has established rules regarding the delivery of a prospectus with a secondary transaction. The way I think of this one, Allison, is that when you buy a used car, there's usually not a warranty, but in certain situations, if the car is slightly used, the warranty transfers. We don't allow investment bankers, underwriters to publish research on stocks they're taking public. So there's not going to be a whole lot of information available in the secondary market for an IPO. So that's kind of what this is about.
Got it.
Which of these is correct regarding the rules? So it's an IPO and follow-on offerings.
Is it D?
D, right on. IPO of a stock listed on the New York. By the way, that would be the same if it was NASDAQ, right? So it's going to be
Well, yeah, I would
25
assume
days.
that it has to be listed.
Yeah, for the a follow-on for the 40 days, that would be a follow-on for a
So a
non.
follow-on would not be listed.
That's right. And
Oh,
then 90
interesting. Okay.
days would be for a IPO of a non-NASDAQ stock. So I don't know. I think this is more likely to be tested on your 24 and your 7 than your SIE, but
Okay, yeah, I didn't see anything on that on mine.
The DEF income fund has a public offering price of $25 per share. If your customer invests 10,730 at this price, how many shares will they receive? Kind of interesting.
Okay, so let's see.
I don't particularly care for the question, but I like what it's getting at. It's almost so easy, it's a trick. So I say, Allison, you're investing 10,730, and you're going to be paying the public offering price at 25. And so it looks like you're going to be able to get 4929.2. He said, wow, I can get fractional shares. I go, yeah, one of the advantages of buying an open-end mutual fund that is indeed you can get fractional shares. When you are buying a closed-end fund or stock, you don't get fractional shares. So I should say you didn't used to get fractional shares. Now, Robinhood, you
Yeah,
do.
I
But
got same.
yeah, so that's what this is getting at. I think
I
this
didn't
could come
understand
up.
the refund.
Well, yeah, that's just nonsensical.
Oh,
Uh,
okay.
I think here, the thing I would know is this is, I don't, I told you, I don't care for the question. I do care for this takeaway. And here's why I care about the takeaway is because this is testable. We have a thing called dollar cost averaging.
Okay.
And I say, if you'll give me fixed dollars invested regularly, you'll be able to buy more shares when they're low and less shares when they're high. And you'll end up with a lower average cost. And you say, well, gee, Steve, that seems like that's going to be odd. I give you 100. I'm going to get fractional shares. I say, indeed. You're going to get, whatever, 33.4 or whatever it is. Records of advertising, customer confirmations, order tickets, U5s. U4 is hello. U5 is goodbye. So not good if somebody starts talking about your U5. The vast majority of brokerage firm records are
Uh, 3 years.
boom. Now let's just go over the others. Do you know what 4 years is? You should.
Mm, no.
That's a FINRA customer complaint.
Okay, so record retention.
So there's only one record that is 4 years. That's
FINRA complaint.
yep. 5 years are anti-money laundering records. That would be the currency transaction report and a suspicious activity report.
Yeah. So 5 years is AML.
Yep. And then I don't know if it's helpful. I think a 6 year records as items of original entry. That would be, blotters. Blotters are the stocks we bought and sold each day. The general ledger. I don't think on a SIE they're going to get into it. I know your testing journey is a long one. This record retention is going to be more testable at the 24 level.
Yeah, 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 absolutely.
SIE. So at the SIE level, I think it's just the vast majority are 3. We do have 2 years ready access, customer statements. It makes sense the customer statements would be 6 because arbitration statute of limitations is 6, right? So customer statements, that kind of stuff. 2 years ready access. So regulators love this. I'll say I'll be back tomorrow, same time. I expect you to have the record. So 2 years readily accessible. And that means you can use it, offsite if you want, but you better be able to produce it within, 24 hours. By the way, it's kind of a weird thing. MSRB customer complaints are 6. So it's only FINRA that's 4. A customer purchased 200
Hmm.
shares of ABC common stock for a total of $5,000 cost basis. After 1 year, they sell the position for 5,400 sales proceeds. ABC paid 50 cents per share over the year. What is the total return? So again, what did we make here? Total return is what we made from the income on the investment and price appreciation, or income less price depreciation. So we got to figure out what we got going on here. We had invested.
Well, they made so they 5,000. So they made 400 and then plus the dividends, right?
That's right. So we're going to put boom. A lot of ways to do math. So, maybe I decide that what I want to do is just put my, what I may invested here first, which is 5,000. So boom.
Okay.
And now I got to figure out, what's going to go on top there. And we said what's going on top of that is going to be what we made from the income stream. So let's do that. 50 cents twice is a dollar. Plus we made, oh, by the way, I got to figure out how many shares. I almost blew it there, right? We
Well,
have
there was 200
200.
shares.
Yeah. So we got 200 shares that we made a buck on. So, right. Boom. So that's the income. Let's just label that. So there's our income. And then remember, this next number could be a plus or minus. Here it's a plus. And so we made another 400 there, right?
Well, where'd you get the 200 from?
I got 50 cents twice. Let's put that there. 50
Yeah.
cents times the two times I received that.
Yeah.
That's a dollar. And then it tells me in the question that I had 200 shares. So if you were receiving a dollar on a dividends from 200 shares, that is $200.
Oh, you're getting 50 cents. Oh, per share. Oh my God.
Yeah. Yeah. Your ABC paid. Oh, my bad. Looks like good catch. Catch the tutor. I thought that was a quarterly or dividend. I don't know why Dean is multiplying by the two. You're absolutely right. That was a mistake. It said paid 50 cents. It told me the whole thing. Even if Dean thought that would quarterly, I should have known
No, no,
that's
no. So it's 0.50
yeah,
times,
times
it's
the 200.
100, right?
No, 200. It's 200 shares.
Oh, I'm
Uh,
sorry. Yeah. 0.50 times 200. So it's 100. Yeah. $100.
there we go. Yeah. Now we're back in business. Good catch.
Oh, I mean, so
Yeah. So good catch. So now
I
we got
was just trying to fit. So 400. So $500. So it's
yep.
really 500 divided by 5,000.
That's right. It is. And
10%.
yep. Boom.
Wow, this one was hard. Do you think that's going to be
Yeah,
in
well,
there?
I made it harder than it had to be. If
No,
a
but sometimes it's
prospectus,
good when you make mistakes because then you're like, oh my God, like
yeah, well,
if
yeah,
you don't
yeah.
read it, it's
Yeah,
hard.
sometimes I'll be doing these on the channel, and I'll make it,
Yeah.
and people start sending me nastygrams. I usually catch myself. I say, "Well, give me another couple seconds."
People
That's
are
what you
so
don't have a
ridiculous.
process
I
though,
know.
because if you have a process, it's easier to catch yourself, right? If you don't have any kind of a process, then you miss it and you don't even know you missed it. If a prospectus is being used to close a mutual fund, it must be given to the investor.
Uh, oh, mutual fund. Um, it's not C, it's not B. Or the sales presentation. This might be a trick question. Is it A, 3 business days?
No, no, you got to give it remember it's retail investments. And so you got to give it to them at, before, during the sales presentation, right? I say this
Oh, say,
prospectus is to
okay.
help you make an informed decision, right?
Got
There's
it.
nothing that's within 3 days that I know of, or five.
Yeah, okay. They probably, yeah, that's just stupid. No, it's not.
Darcy owns 5,000 shares of English Manor Properties. It's her belief that the company is unlikely to grow much over the next year. She is curious how she might generate some additional income from the position as English Manor pays a paltry dividend. She's asked you about covered calls. You tell her,
Ooh, this one's hard.
yeah, of all the things you can do in options, remember you can speculate using options, meaning you don't have the stock, or you can do other things more conservative if you actually own the stock.
Writing calls against her. A.
It's actually D. Buying
right? Oh,
is a
wow.
hedge. That you're correct. That A is correct, but just it's not the answer to this question.
Writing calls against her stock. Oh,
I
ooh.
say, how would you like to agree to sell high your stock? Somebody will pay you $700 to agree to sell English Manor, and that will supplement your dividend income. You say, well, Dina's option strategy go. I go, writing covered calls is a very conservative option strategy. Now, this would have been the right answer if she was trying to hedge. So that's the right answer to a different question, right? That's a choice to sell, and writing calls an obligation to sell. This is a choice to sell the stock you own. This is an obligation to sell the stock you own. This is a protective put. That's a covered call. Right now, again, I think we're pretty good. We're at question 22. And I think this is the first option question we've encountered. On your SIE, I would expect to encounter maybe 3 or 4 max option questions. Maybe one is like strategy. So let's see if it holds true on this particular draw. We would expect if it was a draw like the SIE, that the next 2 or 3 option questions we may see would not be strategy, be recognition, like when do they expire or things like that. Betsy being a mass the current yield is very testable. So total return is very testable in the SIE, and current yield is very testable. I think of current yield as what an investment pays you divided by what it costs you.
Okay, so
Another way you might want to remember it is AMP. AMP.
current yield.
Yeah, annual interest divided or annual dividend divided by the market price. You earlier in our time together said, Dean, do I need to know par? I said, you do, because you need to be able to figure out, is that 6% of 100 that you get paid or 6% of 1,000? This is a bond. And so that 6% is based on par. That's the nominal yield or coupon rate. That doesn't change. You're going to get $60 in annual interest. And to capture that $60 in annual interest, you paid $1,200. What an investment pays you divided by what it costs you.
22.
What this pays you is $60 in annual interest. That'll be paid to you semi-annually, costs you $1,200, and so your current yield is 5%. By the way, we should have known it's going to be something less than 6 because we're paying, what we're paying here.
So you would always do 1,000 times whatever the
That's to figure out what the annual interest is. Indeed, if this were a 6% corporate bond, right? If there was a 6% corporate, preferred stock, then we would take par of 100 times 6% and find out that $6 paid annually is a dividend. So that par is important. Par in a preferred stock is 100, and par in a bond is 1,000. And remember, they trade as a percentage of par. So here, 1,200, that means interest rates have gone down and causing this bond to go up.
So you took, sorry, just to get this answer. So you
Right.
took 1,200 divided by 60 or 0.60?
No, I took no. I first figured out what the investment pays. So,
Yep, which is 60.
yeah. So current yield, we said, is what an investment pays you divided what it costs you. What it pays you in a bond is annual interest. Annual interest, right? So a good way to remember AMP. Annual interest or annual dividend divided by market price. I said, okay, well, what it pays me, it's a 6% bond. And so 6%, that is based on par. That's the nominal yield. That's the coupon. That's the fixed or stated rate of return. So I figured out the annual interest in this bond is $60. I said, okay, so I'm making $60. To make that $60 in current yield, I paid $1,200. So 60 divided by 1,200 is 5%. I said par is important because if this was a preferred stock, it would be 6% on 100. It'd be a $6 dividend, not $60 in annual interest, because stocks pay dividends, right? So that's what we did. I've said in this discussion we're having going through this practice exam, I said there are 2 things you should be prepared to calculate. There's only 3 or 4 practical application questions, math questions. But we said you should be prepared to do total return, which we've seen a couple times already. You should be prepared to do current yield, which I think is the first time we've seen this. You should be prepared to know how to adjust stocks for dividends and splits. And we said you should be able to do tax frequent yields. Those are the four kind of math things that you should be prepared to do on your SIE.
And this was current yield, current, yeah.
That's right. As interest rates rise, the prices of preferred stock will.
I think they're gonna fall.
Yeah, right on. They're testing on the inverse relationship of interest rates and fixed income investment vehicles.
Yeah.
So right on.
Interest rates rising, it's bad.
Yeah, that's right. During the cooling off period, the underwriters may not. The cooling off period test question is a minimum of 20 days.
I think they can take indication.
They sure can, which are
I,
non-binding in all parties. Very much
yeah,
A is true.
I think they can even do B.
That's right. That's called a red herring. It includes pretty much everything you need to invest except the final offering price.
I think maybe it's C that they can't engage in due
Well, no,
diligence.
we should continue to do due diligence. If we actually sent you sales literature, you wouldn't read the preliminary prospectus, right?
Oh, they may not. They can't do sales literature?
No, 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 because you're supposed to read the prospectus. So what we do is
Oh,
we engage in due diligence, right? Due diligence is making sure that all the information is truthful and relevant and that
yeah,
we haven't omitted any material facts.
yeah.
And we should be doing that the whole time through, right? Your customer owns 300 shares of Big Co. common stock. In the upcoming election, there's 3 open board seats. Big Co operates under a cumulative voting system, very much a test question. How many votes does the customer have in that vote?
Is it A?
No, bad miss. Bad
Is it
miss.
C?
It's C.
Whoa.
Right.
Why is it C? That they can do it any way they want?
Yeah, I say, listen, with cumulative voting, we simply multiply the number of shares you have, shares vote, not people, by the things we're voting on, in this case, 3 board seats. So 300 times 3, you've got 900 shares. And if that first board seat member who's up for election is your friend, you can put all 900 shares on that. So it's not no more than 300. If it was statutory voting, 3 styles of voting you could test on. If it were statutory voting, it would be 300 yes, no, 300 yes, no, 300 yes, no, right? You would have 300 votes and it would go boom. I always think of a proposition on the ballots. In my state, if there are 10 propositions, all I get to do is vote yes, no, yes, no, yes, no. If it was cumulative, I have 10 votes. I could spend them any fashion I'd like, right? The cumulative voting protects smaller shareholders because on any one thing, you could put all 900 votes there, right? You don't get to vote on anything else. The last one that you get tested on is what's called super voting. And super voting shares are shares that have more than one vote per share. Like Zuckerberg has super voting shares in Facebook. The Ford family has super voting shares in Ford Motor Company, where they have actually 10 shares per 10 votes per share. Very testable.
Yeah.
A person who looks to provide advice to a city government considering the issuance of municipal debt securities would best be described as.
Person who looks for right advice to. Hmm.
Yeah, this one's a tough one. This one's a
This
tough
is
one.
weird. Like
It's very,
I'm thinking like B and C are like throwing me off, and it's just an
yeah,
investment
see, yeah, right
advisor.
on. Well, yeah,
Yeah.
the advisor is the firm. So,
Oh, 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 yes.
so the person here, we have natural persons and we have unnatural persons legally. What I mean by non-natural person is that is a not a living, breathing human being. That is a corporation or an LLC. So Morgan Stanley is still a person. They're just not a natural person. And Morgan Stanley has corporate finance, men and women who give advice to corporations, and public finance, men and women who give advice to municipalities. So here, this would be the advisory part of Morgan Stanley, where I say to the city of San Francisco, our advice to you, Morgan Stanley, giving advice to you is you should issue some special tax bonds. That's our advice to you. And then they say, can you sell the bonds? I say, nah, the MSRB prevents that. I wouldn't worry about this question. I think it is kind of a funky question, but I would know that the MSRB does have some rules. And one rule you do get tested on is how much a MSRB, how much the firm, the municipal advisor, or the municipal securities rep can give to a political official. And you have to be able to vote for them, right? So the MSRB Rule G37 says, can a municipal securities professional, firm or individual, make a campaign contribution to somebody who might be able to influence underwriting as a politician, the mayor, the governor, whatever? The answer is yes, but the max is 250, and you have to be able to vote for them.
250, okay. Oh, yeah, yeah, I knew that. I knew that from work.
Yeah, there you go. Right on.
Yeah.
By virtue of stocks listing for trading on a U.S. stock exchange, which of the following risk is reduced or even recognized as eliminated?
Ooh,
Yeah, kind of a funky way to word this one.
by virtual stocks, so price risk is not eliminated.
For sure. Yeah, I like that process of elimination
Yeah,
for sure.
like what? Equity risk? What is equity risk? Just that you don't have enough
Yeah, that
capital?
you're a stockholder and you can, lose your whatever you invest in.
Oh, okay.
It's very much the same as D.
Yeah, that's not right. I mean maybe B, I don't know.
Yeah, this one it's kind of funky way to ask.
Liquidity risk?
Yeah, because you can turn your stock back into money rather quickly.
Oh, okay.
Yeah,
Okay.
I just I was funny. I was saw Mark Cuban being interviewed about selling the Mavericks controlling interest to the Adelson family, and they were asking him why he just made that decision. And that was funny. He kind of said, "Well, when I first bought the Dallas Mavericks, there were still a lot of mom and pop owners of these teams, where I was competing in that space, and I could go to somebody and say, 'Hey, how about I give you $3 million for a draft pick?' And they'd say yes." And he says, "Now I'm competing in a space where there are private equity firms and guys like Steve Ballmer who." He can sell $2 billion worth of Microsoft stock to buy the team, and he's got billions behind that. He says those economics are a little different. He says, yeah, am I a billionaire? Yes. Do I have $180 billion of Microsoft stock? I do not. So, so he
I love
says,
Mark Cuban.
yeah, so he says, exit stage left, basically. I like what he brought up because that's what Ballmer did, right? He said, hey, Oprah was circling, Geffen was circling to buy the Clippers. And I said that he said, I know they're billionaires, but I don't think they can come up with $2 billion on T+1. I simply called my broker and said, sell $2 billion worth of Microsoft. And I came in with my knockout bid. I wish I lived in his world, right? At the time, it looked like he was overpaying because it was like $1 billion too, and he came in at $2 billion. But in retrospect, maybe not so much, right? David Rubenstein, I thought was funny, was being interviewed, and he was being interviewed by Alice Rodriguez, who's trying to buy the Timberwolves. And
Oh,
David Rubenstein was kind of teasing him because Carlisle looks like it might help out. And, uh,
really?
well, I don't know. They keep saying, are they or are they not? I mean, the guy who's selling the Timberwolves is saying, well, where's the money? But long story short, if it's, Blackstone or Carlisle or TPG, that's different than Mark as a sole proprietor.
Yeah,
Right?
of course.
Before an option trade may be entered for a customer, the customer's account must be approved by options trading. Very testable.
Or option train, maybe. It's B or D.
It is B, the
It's
registered
B, yeah.
option principle. So that doesn't look
What's the
like that's,
difference between a firm principal? So
there is no
weird.
such thing as a firm principal.
Oh, okay.
Remember, you're going to be a general securities principal. That's a 24. If I asked you to be in charge of the derivatives business of the firm, you would get what's called a series four, and that's a registered option principal. Uh, Very testable. So I give the customer the disclosure document, characteristics and risks of options. I say, Allison, I'm now going to try and get your account approved by my ROP. He's going to ask me if I gave you the disclosure document. I'm going to tell him yes. I hope to get your account approved. Once your account is approved, within 15 days, I need back from you the option agreement saying you read it and you understood it. Very testable sequence. I think a good way to remember it is with mnemonic or memory aid DATO 15. I
Okay.
give you the disclosure document. I get your account approved. D's disclosure document, all the bad things that can happen to you, 100 plus pages. There's no way you can read this while I wait. I get your account approved. That's the A. Once I get your account approved by our ROP,
Dado.
yep, we can do our first
I
trade.
got
That
a question on this and I definitely got it wrong, so I'm
yeah,
not going to get it wrong. They
there
definitely
you
ask
go.
it.
There you go. Option agreement.
Because you can basically make a
Yeah,
trade
absolutely.
essentially. Yeah.
Absolutely. Absolutely. So, and in
You
15
get
days,
15 days to sign the paperwork.
that's exactly
I
right.
wish they did that for marriage. Like you sign the paperwork, but you get 15 days or something to take it back.
Yeah, say, never mind.
All these celebrities, yeah, nobody be married.
Oh, yeah. Well, I just had a friend of mine. We have met somebody online. They're going, they were going, yeah,
Going
I'm in Northern
strong.
Arizona. They're going to do a 5 day backpacking trip into the Grand Canyon. I was like,
Good
ooh,
luck.
that's going to be an adventure for sure. You're going to find out each other whether that's going to work or not.
Oh man.
FINRA. FINRA regulates all matters related to investment banking, including,
Um,
I would know FINRA is the SRO for sure.
yeah, well, yes, I got another. I also got a question on that I don't know if it's so interesting. I don't know if I got right, but I'll tell you about that later.
Yeah.
Um,
Well, you just brought up, I think this is interesting. Gary Gensler would like to be running the world. That's the SEC.
yes,
Whether it's FINRA or the SEC, they
yes,
don't
but
have
they're
any regulatory
self-regulatory.
authority of
It's
future
FINRA.
markets
Yeah,
and commodities, right? So the CFTC is kind of been helpful with the crypto guys saying, "Hey, you belong to us," and the SEC saying, "No, you belong over here."
yeah.
So
Is
it's
it
training,
it's C, right? The
yeah,
over the counter. Yeah,
yeah, and
FINRA.
insurance is just insurance. So that one's kind of stupid. All registered persons must complete training sessions by annual December 31st to comply with.
Um, it's not A. FINRA's regulatory. It's B or C. Both are regular. Firm. I guess it's
Yeah, you got
D
to
too,
comply
right?
with.
Because
Oh
you
yeah,
have to have continuing
yeah,
education.
yeah. We got to have CE training, continuing ed that's unique to your firm, and then also the regulatory component. So there's two
This is a trick
components.
question.
Yeah, yeah. There's two components here.
Okay.
For preferred shares, the annual dividend is, here we go.
Oh, okay. It's paid. Hold on. Let me remember this. Preferred is paid.
Yeah, I just showed you an example of this, so hopefully we get this one.
Um, it's the par value.
That's right.
Is it fixed?
Yep. Remember, I
Yeah.
just showed you 6% on 100, $6.
Yeah,
Absolutely.
$100.
Yeah. I get this all the time, and I don't know what to make of it. I get a lot of people on debrief on the SIE saying they had more preferred stock questions than they were expecting. And I don't know how to respond to that because I go, well, I don't know. How many were you expecting? I mean, there's no like bucket of like,
Yeah.
there'll be X number of questions on
I think
this.
I got a lot too.
Yeah. An individual has been a registered rep with a national firm for the past 3 years. Another member firm makes an attractive offer and attempt to lure this individual to join them. In order to do so, the paper network necessary would be
Hmm. I guess just a Form U5, right?
No, it's amended U4 to for this firm. So your existing firm files a U5 disassociating you from that firm, from your
Yeah.
old, and then the new firm does what's called an amended U4, saying you're now over here. So it's actually we're going to file a U5 and then what we call an
And
amended.
then the new four. Oh, interesting.
That's
Okay,
right.
so I got half
Yeah,
of it.
that's right. And the U5, you have to give a copy to the rep so that we're under the, both people are on the same page about the disassociation.
Yeah, the new firm is doing a
Yeah,
U4. I
that's
got
right.
questions on this, so this I knew
Oh,
that I know
yeah,
this.
very testable. Yeah, it's
Yeah.
U5. Well, here we go. Another U4 question.
Yeah.
Information on the U4 is extensive. It includes name, aliases, adjusted in addition to which of the following?
Ooh, it's A or D.
It is A or D. So you got to decide which one you want. The way I get when I get stuck on these as a test taker, I think what would the regulatory authorities be more concerned with?
I
And
would think the employment history.
there you go. That's right on. And then
Yeah. But what was getting me mixed up was like, I was like, if someone's taking this exam, not exam, but like if you're becoming a registered rep, you're usually like 25.
no, that's right. Yeah, no, that's
Yeah,
true.
you're
This is
not
the
gonna
way it's
have
ended.
10 years, except unless me, like I'm older
Well,
than
no, we want to
people.
know if you went to, with 5 years residency would mean summer camp or whatever. And you're right. And then, maybe you were
So
paper.
that's what was messing me up. I'm like, nobody has tenure. Like the girl who just
No,
took the 7 is like 23 or 24.
yeah,
She
no
just
break. Right here.
graduated.
Yeah. And they want no break in the material. So, yeah. So she would have to put,
So 10 years of interesting.
yeah. And then 3 years, we verify the previous three. Yield to call reflects the early redemption date
Oh, ooh,
and this one was a pretty sophisticated for an SIE.
this is hard.
Yeah.
I don't know. D. I'm just taking a wild guess.
Yeah, this one was really tough. This is another one of those we said you're going to get maybe two or three judgment questions
Yeah.
on the SIE. This
Was
one
it
is
D?
tough. Yeah, mainly
Oh,
recognition, mainly practical application. So if my bond gets called, that's because interest rates have gone down. So if interest rates have gone down, the issuer is going to replace their high cost debt by calling with low cost debt. And so this is actually going to be 2 and 3. If I bought the bond at a discount, it gets called. Woohoo! I'm going to make
right.
that money faster than had I bought the bond at a premium, right? So it's going to be accelerated of the discount of the gain, right? Because I'm going to make, instead of holding it to maturity to get that gain, I'm only holding it to the call. So that's 2. And then 3, accelerated loss on the premium, right? If it gets called, I bought it at a premium and it gets called, then I'm going to have an acceleration of the loss. The accretion, the way I think of it, what Dean thinks is not testable, but I think of a 2 as accretion up and decretion down. So it's actually 2 and 3. Really a tough one. I wouldn't worry about that at all, but boy, that's a tough one. The risk that all or significant portion of a sum invested might be lost is known as,
Capital risk?
indeed, in our
Market risk is just the market going up and down and
That's
having
exactly right.
volatility.
That's a
Yeah.
good miss, but that would have been a miss because of the very reason you just said.
No, I didn't think it was market risk. I just want to, these are the risks that kind of screw me up
Oh, there we
sometimes.
go. Purchasing power is inflationary risk, right? Yeah, I'm with you. All these could have been the right answer.
Yeah.
Purchasing power risk would have been the risk in fixed income investment vehicles that they don't buy you the same level of products and services, right? And the test question, it would be, what would be a suitable recommendation for somebody who works about purchasing power risk? There would be two appropriate answers: common stock or tips. Treasury
Pips.
inflation protected securities. Market risk is also known as systematic risk. Call risk is associated with the declining interest rate environment. And so call risk would be the risk that they call the bonds away from you, and that's associated with declining interest rate environment.
Yes.
Right. So yeah, all those could have been right answers to different questions indeed. Which
Which
is
is
long as
fun.
the least accurate statement of the balance of payments. So when I think of balance of payments, I think of debits and credits, dollars, US dollars out, foreign currency in. US dollars out are debits to the balance of trade. Foreign currency coming in is a credit to the balance of trade. So this is asking about a surplus. And so that means we're going to have more foreign money coming in than US dollars going out.
Hmm. Fewer dollars are flowing to the United States out of the United States. The value of a dollar is currently owned. You said there's more money coming in from foreign?
Yeah, yeah. So
Yeah.
that
So it'd be C.
well, exports are currently exceeding imports.
Oh, no, no, imports. Sorry.
Least accurate.
Oh, then it's
Right.
fewer dollars are flowing into, yeah. Do you
Yeah.
think this would be on there?
No, but I do think so. I prefaced it. What is going to be on there is some economic questions. The economic questions about the balance of payments or balance of trade are going to be about a strong dollar and a weak dollar. And so they're going to ask you, and now that's a meaningless thing unless I tell you about, relationship to what. So boom, strong dollar and weak dollar, and how that will affect the balance of trade. So if the dollar is strong, that's going to make US exports less competitive because we're going to have to charge our Mexican friends more pesos. And it will make US imports more competitive. I joke, again, and this would be bad for the balance of trades. Let me maybe just give you an example here. Let me get this done here. Boom, boom, boom. More competitive. Well, and so that means we would be contributing to a trade deficit with a strong dollar. We would typically have, more foreign currencies, more dollars going out. I joke, I'm a US importer, right? So Alice and I import Swiss watches like this Rolex. I import blue sapphires from Thailand. I import tequila from Mexico and, scotch
Yes,
from
I knew that.
Islay. So strong dollars are great for me because I'm a US importer. But again, I'm contributing to the trade deficit, right? Because Dean's dollars are going out to, Isla and Jalisco and, wherever, right? And as I said, it makes it harder for U.S. exporters because they're going to have to now sell their products and they're going to have to get more pesos. It used to be 20 pesos to get a buck. Now it's 20. And Caterpillar's going to have to double their prices to get the same amount of pesos to dollars, right? Now, the weak dollar, the test question here again is about how the strong or weak dollar affects that. By the way, strong dollar is associated too with a higher interest rate on U.S. Debt securities. But in a weak dollar, now U.S. exports are more competitive, right? Because we don't need as many, pesos or yen or whatever. And again, a weak dollar means Dean has to pay more for my stuff, my imports, which means I might, instead of drinking scotch, go back to bourbon, right? So, I tease, right? But, I was at a bar and I didn't order my traditional Lagavulin, which was a scotch, and I ordered some makers, and he goes, "Hey, Dane, what's up?" And I said, "Well, have you seen the exchange rate? I've decided I'm going to stick to an American whiskey and do my part to help the trade deficit."
Okay, so strong dollar.
Yeah, and then the test question here is that means trade surplus.
So if there's a stronger dollar, we're exporting less.
That's exactly right.
Yeah, that makes sense because everyone's buying in the US.
Yeah, and then I joke. The other thing you can do in terms of your similar thing, people, when I travel the world, I don't travel as much as I used to, but I when I'm doing a fun trip, I would always check the exchange rate and say, hey, where are my dollars going to buy me more stuff? Right. And if the dollar's strong, I go, I joke about I bought this ring in Thailand. And when I was there, the baht exchange rate was incredible. I was like, man, I can buy the whole factory. I'm joking, but not, you know. So that's the test question. So your point, I think this is a funky version of something that is testable. The trade deficit or trade
No,
surplus.
I got a question on that, and I don't think it's another
Yeah.
reason why I didn't pass. I really
Yeah.
stumbled. I really struggled on it.
Typically, a corporation would not issue.
Well, corporations issue, well, I guess they definitely issue common stock.
There's no such thing as a corporation that has not issued common stock as part of its
Yeah.
capitalism.
But is this a trick question where it doesn't issue preferred?
Well, no, they do. They could
They
choose to.
do. Yeah, yeah. Is it D options
Yeah,
contract?
yeah. Option
Yeah.
contracts, the issuer and guarantor of option contracts, the OCC. So
Yeah,
the corporation has
what's the
nothing.
debentures again? What is that?
Debenture is just the fancy word for a bond.
A bond. Okay. Yeah.
It's unsecured. It has a full faith and credit. All the following terms and phrases are associated with the buy side of an option contract, except.
Ooh. Does it not pay the premium?
No, when you buy an option contract, you do pay the premium,
Okay.
right? You have a right or choice to either call the stock away or put the stock, A. For that right or choice, you paid a premium. You're the
Oh.
owner of the contract. You didn't write the contract. Writing the contract would mean you're short.
Mm.
So it's C, right? That would be you have an obligation, you receive the premium, right? So boom. As I said, by the way, there we go. This is our second option question. We would expect 3 or 4. We had one strategy question about covered call. You gave me the strategy answer to hedge a long stock position. Either one could have been there. And then we would expect definitional kind of questions. Which of the following accounts can only be opened in a cash account? So the two basic types of accounts at a broker dealer are cash accounts where you intend to pay in full,
Yeah.
margin accounts where you would like the broker dealer to loan you.
Yeah. What about custodian accounts?
Yeah, remember we said very testable. There is no margin for uniform transfer to Miners Act. That's a custodial account, or uniform gift to Miners Act. Those are custodial accounts. Dean Tenney as custodian for. So very testable. No, we don't have margin for retirement plan accounts. We don't have margin for custodial accounts.
So
Right?
is it three? It's I can only be opened in cash for IRA and
Yeah, that's right.
custodian.
What they're getting at, I think it's funky grammar, but what they're
Oh,
getting at is
yeah,
what.
like this is a margin question.
Yeah, but yeah, and then 3 or 4, right, would be
Yeah.
which of the following accounts can only be opened in a cash account? What's testable is to know no margin for 3 and 4, which means they must be cash accounts.
Yeah.
A central physical marketplace where securities are traded through a designated market maker is. So physical marketplace, think of where you're at. Is there a physical marketplace where you are at?
No.
You should know there's no physical marketplace for over-the-counter trading. If we're talking about physical marketplace, we're talking about a specialist, a designated market maker who holds limit orders for floor brokers whose customers want to buy or sell at a particular price. So this is another version. I don't like the phraseology, but it's another version of exchanges or auction order driven markets. The New York Stock Exchange is indeed a physical place,
Got it.
right? Over the counter stocks are traded, through negotiated quote driven markets, and they're linked telephonically and electronically. We said the third market is listed securities traded over the counter. And we said the fourth market is direct trading between institutions. So again, I don't like the grammar, but it's getting at this distinction between New York and NASDAQ. The first step in the process of adding an options trade into a customer account
Third,
is, what's that?
third question.
There we go. And again, it's recognition, right?
The first step of the process. Okay.
Oh, by the way, no, I take that back. It's our fourth question because remember we had the ROP question too.
Mm.
So we've had, now this is our fourth, and so far fitting the pattern. 3 recognitions, 1 strategy.
Is this Dato again?
That's all right. Dato 15.
Dato.
Dato 15, disclosure, account approval, first trade, option agreement back within 15 days.
So if this, would it be C?
C. Yep. Well, no, remember, he's going to read it. He doesn't have to read it while I wait. Right. That's the whole point.
Oh,
Right. You can't, it's 100+ pages. You can't possibly read it while I wait.
approval. Is it A?
There you go. Right. And then I go get the account approved. Right. Boom. Which of the following statements regarding a shelf registration is false? Is false.
Well, it's good for 2 years. I know that.
Yeah, it's either 2. You're correct. It's either 2 or 3, depending on the type of issuer you are, but B is true.
So is it D? False?
Well, no, it could be 3. As I said, it could
Oh,
be.
if it meets certain, okay.
Yeah, this one's kind of funky. I
I
don't
don't
know.
think it's yeah, I think it's A because I
Yeah,
don't think we
yeah,
need
A
an
is
actual
false.
perspective.
Yeah,
Yeah.
yeah. But I would know the WIXI is the 3 years, a well-known seasoned issuer of securities, and that's called a WIXI. So that's 3 years. If you're not a
Okay.
WIXI, then it's 2 years. But you will get tested on the shelf registration. The one that most often shows up is this 3 years for WIXIs. WIXI is a well-known seasoned issuer of securities.
Oh my God. Well, no, okay.
A put would have intrinsic value just before expiration if the price of the underlying stock is.
Ooh,
You remember our memory aids for options?
no.
Call up, put
Put
down.
down.
Call up, put down. Put down. A put will have intrinsic value if the market price is.
Oh. It was like less than the exercise price.
Boom. Call up, put down gets a lot of option questions correct, right? It would call up. C would have been if it was a call.
Less.
Which of the following securities is exempt from Reg T margin requirements, but still subject to an initial margin requirement as determined by the broker dealer?
That is that options?
Well, yeah, we can't lend you money to buy options. This is kind of a funky one. The one I would be prepared for on your SIE is we typically don't lend you money for options, and we typically don't lend you money for new issues. But T about Treasury securities are exempt from Reg T. I think this is a stupid ass question. But Reg T does not apply to government securities. So then we, the broker dealer, would decide. So
Oh, okay.
subject to Reg T
Got
option.
it.
So yeah, kind of a stupid ass question. A face amount certificate company is best defined as, this is a type of mutual fund under the Investment Company Act of 1940.
We need to go through mutual
Legally
funds
in the
today.
United States.
A contract between a face amount certificate is best defined as. Is it A?
Yeah, I don't I haven't anybody and ever tell me they've on debrief got received a question about a face amount certificate company.
Oh, okay. Next.
Advantage to the investor offered by an investment company mutual fund is.
Well, I think it could be one and increase purchasing power. I don't know, maybe D. I have no idea.
Yeah, I'm with you. Kind of funky question. I think I would have got this by process of elimination. You are correct. I wouldn't be struggling with one. That's the point of a mutual fund is it allows Joe Sixpacks retail investors to professional money management that they might not be able to avail themselves of in other formats, right? I mean, mutual funds will let you invest like $500. I doubt, Allison can hook me up for $500 at your place, right? So that one is
Not
true.
at
We
all.
shouldn't,
Yeah.
yeah, we shouldn't be struggling with one. Special securities prices available only investment companies. Now, investment companies don't get special prices. They certainly have market risk. And yeah, because if you buy a mutual fund with common stocks, you might be able to get more purchasing power, but I don't really like that for the three things that are very testable about why you would buy a mutual fund are professional management, diversification, and ease of ownership. Those are the three reasons to buy a mutual fund. Which of the oil and gas direct participation program partnerships is the riskiest?
DDPs. Interesting. Maybe C. I don't know.
Yeah,
Maybe.
this is exploratory. You boldly go where no one's gone before. You drill a
Well,
hole. You either win big or you lose big. It's called Wildcat. A Wildcat program is an exploratory program where we go somewhere nowhere else has gone and we drill a hole. Income is where we buy proven producing reserves. And so that would be the less aggressive, the safest as these go. Combined would be combined. Raw land you should be able to toss out, but it's exploratory. I would expect maybe one or two questions on partnerships, and here's our one. So let's see if we get another one. Usually it's the type of programs that are available, partnerships, direct participation programs are partnerships. And it's the types of programs and typically a question about illiquidity, that you can't get in or out of a partnership without the permission of the general partner. Which of the following is a benefit of a 529 plan, a 529, but not a Coverdale? You will get at least a question, maybe two, on 529 plans. And Coverdales are so ugly and not competitive that I know of no one who, any financial institution anymore that offers a Coverdale.
hmm.
Let me give you an example.
Is it
Present,
C that it can be transferred?
no, it's A.
Oh, there's no income. Yeah,
Yeah,
I was between A and C.
Coverdales have an income restriction. You can only put 2 grand in them. I mean, how much college education is 2 grand going to buy you? It can, not a whole lot, right?
Some books.
Yeah, maybe. Yeah, right. And a defined benefit pension plan. So the two types of pension plans are defined benefit as contrasted with defined contribution.
Oh, okay. Defined benefits or benefit. The way I think about this is benefits from the employer.
That's exactly right. If we have a defined benefit plan, we say to our employee, when you retire, we're going to give you a percentage of your base pay and health care
Yeah.
for the rest of your life, which is one. And then that employer would be required to make contributions to make sure that that pension fund is
Yeah.
fully funded. So it's
I think,
1 and 4, right?
yeah, I think the contributions can
Yeah,
vary, but the benefit is going to be fixed. Yeah, that's
that's
what I
right.
thought too.
And then the opposite would be true of like your 401k. Usually most people think of defined contribution as like their 401k. The benefit is going to be variable because we don't know what that's going to grow to or fall to. And the contribution that you would put in and we match you on it would be fixed. Which of the following is a leading indicator?
Oh, I messed these up. Is it,
Yeah, this is the economics component. It
yeah.
is there. The one
Is
they
it
asked you on the test.
GDP?
GDP is how we measure the economy. If I told you the total goods and services an economy produces can best be described as, then you would be correct to say C. But leading indicators tell us where we're heading. So that's kind of how I think of it. Something that I'm looking at that's going to happen in the future. Coincident indicators tell us where we're at. Lagging indicators tell us where we've been. So I think of things that have happened in the past. So which one of these are things that is going to happen? Think about a locomotive, the caboose, looking out the window. So which of these would be a locomotive in terms of driving the economy forward?
Wages
Wages are a coincident indicator.
or new orders?
Yeah, coincidence. Yeah, new orders. There we go. Right. Mr. Smith enters a stock trade at the same time as Mr. Jones, who has material non-public information. Mr. Smith is considered.
So they're saying Mr. Smith has MMPI.
Yeah, so Mr. Smith enters the trade at the same time Mr. Jones, who has inside information.
What?
Yeah, this is a crazy question. I don't know what they're getting at. I think what he's getting at is if you are a contemporaneous trader, you could be held liable for what's called
Let's
trading
see.
along. I think there's a little out of the realm of possibility of a, SIE exam, but that's a contemporaneous trader. That's more if you're 24, right? In other words, Mr. Smith may be liable if he's shadowing Mr. Jones trades. There's nothing in this question that tells me he's doing that, but right, contemporaneous. A company has extensively over leveraged using debt financing whenever available would be exposing its investors to
Maybe liquidity risk?
not liquidity risk, a financing risk, right? You got this problem with,
Finance risk. Okay.
yeah. I mean, call risk would be, you might have been thinking, can we refinance? You're right track, but it's actually
Yeah.
financial. Again, I don't really think that's a SIE kind of a question. How long do blotters, general ledgers, and stock records need to be to maintain?
Stock records?
Yeah, stock records are
Is
the
this
stock.
5 years just like the other one?
No, no, no. This is what items of original
6
entry. This
years?
is six. Yeah.
Mm-hmm.
Blotters, these are what I call items of original entry. If I think you're cooking your books, 5 years was money laundering records.
Money laundering. Okay.
Vast majority are 3. And then one more time, 4 years is customer compliance, right? So very few records are 6 years. I can't think of the other one I would add to this. And so it's customer records, customer statements. But other than that, everything else is 3. A mutual fund share class determines we have A shares, B shares, and C
B
shares.
shares. Is it A?
Yeah, that's exactly right. Right. This determines whether you're going to pay the
Front load, back
right.
load, the whole thing.
That's right. The A shares for people who have a large amount to invest, long time horizon. B shares, long time horizon, not so much money to invest. C shares, shorter term, right? A company's board of directors approves a dividend payment. When this occurs, it is recognized as
Well, the ex-dividend date and the record date are the same, right?
that's correct.
So is it, I don't know,
Yeah, declaration. I think of
yeah.
this as DERP. There's 4 dates, right?
DERP. Yep, I know DERP.
DERP, right? So record date is when they look at their shareholder list, and if you're on there, you get the dividend. X date is first date on which it no longer trades with the dividend attached. C is the payable.
Declaration X. Yeah.
Yeah.
Record payable. DERP.
FINRA rules regarding outside business activities require
Uh, I think it's C.
that is C, right? We want to know what you're doing outside the scope of your employment. An investor has a friend who mentions that an officer of the firm he works for reported to the CEO in a confidential meeting that a product has had great results. If this information were public, it would have had a positive effect on the corporation's stock price. If the investor now makes a large purchase of that corporation stock, who besides the investor may be liable for the insider trading and Securities Fraud Enforcement Act? again, funky way of asking this, but
Yeah. Ooh. I guess maybe D
it's
or
not the
B.
CEO. What they're getting at in this question is that both the tip E and the tip are liable for the Insider Trading Act of 1988. So I don't like the grammar in this
Oh, the
question.
investor's
Set up.
friend. Okay.
Yeah. So again, I don't like the grammar, but the friend is the tip E. The guy who received it is the tip and that's what they're getting at in this question. I don't like how they got at it, but it is testable to know the tip E and the tipper are both liable. The U4 requires registered reps to disclose all the following except
Except
I think you're going to get this. Go back to our previous conversation. It wasn't 10 and 10. It was 5
it
and
was
10.
5 and 10. So is it oh, it's C.
There you go.
It's a weird, yeah.
Yeah. Yeah. An investor has a long position in OMQ stock. After selling the stock at a loss, the investor could purchase which of the following and not violate the loss sale rules.
Oh God. This is like a sixth option question.
Yeah, and this one is really funky, and it's not really an option question. It's about how are you getting back into the position within 30 days is what this question is about. And they're just using options to kind of mess you up, right? But warrants would be my choice to get back into the stock. B is my choice to sell more of the stock. C is a way to buy the stock, and D is a way to get the stock. And so this one's just stupid. It's the put options because there I'm having a choice to sell. I just think it's a stupid ass question.
Yeah. Isn't stupid.
An individual who would most likely be statutorily disqualified from working in the securities industry for which of the following?
Ooh. It's not A.
That is correct. It is not A.
I'm leaning towards
We should know that C,
D.
the C has to be a misdemeanor involving monies or securities.
Yeah.
And B is you're charged. If it was a conviction of a felony, that would certainly be the answer, but it's not a conviction. You were charged. So
Yeah.
it
So
seems like
D.
the most, yeah, you said on your U4, you lied, right? You
But
checked this
also
box.
like
So,
yeah, like you're giving advice and you're
yeah,
filing for
yeah,
bankruptcy. It's weird, but okay.
yeah, yeah. By the way, willful means you knew we were lying, right? That's even worse, right?
Yeah.
Which of the following best describes a prospectus?
Is it C
Yeah, I
or no,
think,
it's B, B, B.
I think B is the best answer given
Yeah.
the answer set, right?
Yeah.
The market price of a company's common stock could be affected by,
Definitely one.
right on. The market's all about
Because
earnings or future expectations of earnings.
that was us yesterday.
Yeah.
Interesting. Maybe 1 and 2 or 1 and 4. I'm gonna go with C, 1 and 2.
Yeah, I think it's going to be all of them. We'll see. I would have gone for all four because, the economics, economy.
Oh, I didn't even know that was an option. Sorry, I didn't look at that
Yeah.
one.
Yeah. But we'll see. I would have gone for all four, but we'll see. What I try and do is just make up examples where they can I find in my brain think of where, the Israelis take out
Yeah.
the Iranian oil platforms. Oh yeah, boom. We got a surge in oil. For investors, changes made to tax law of the government are known as,
It's a tax law? Jesus.
yeah. So who is in charge of changing? This is a twofer kind of question.
Is it B?
Yeah, it's who changes these laws is Congress, right? So
Well,
you
let's hope that
legislative
capital gains
risk.
don't go up.
Yeah, legislative risk, right?
That would be awful.
Yeah, and remember that like it used to be a dividend exclusion was 70, now it's 50. They've talked about changing to mandatory FIFO. So I use like what Congress giveth, Congress can taketh away, right?
Ugh.
Income level of a donor.
Oh, what do they mean by donor? Like someone that's giving the
Yeah,
money?
you're donating monies or securities to, in this case, it sounds like to me just from the answer set for college education. So
Will not
I'm
affect
not sure.
contributions, may not affect, may affect country. I mean, it could affect it if they don't have a lot of
Right
income.
on. Remember, it's means tested. Coverdale suck. I mean, the main test take
Yeah.
question is the Coverdale suck compared to 529s.
Yeah.
Risks that are unique to a specific industry, business type, or investment type are known as.
Risks that are unique to, oh, A or D? I
Yeah,
guess A.
that's right. I love it. That's a good test taker, right? It's got to be one of those two. I can't leave them in the same answer set.
Yeah. A seems too easy though.
Well, systematic risks are risks in the system, the tendency of securities prices to move together. Non-systematic risk is also known as selection risk. I think a systematic risk is when bad things happen to good stocks. And this question is about a bad thing happened to a bad stock.
Oh, non-systematic risk
Yep.
center, yeah.
Yeah. The board of directors of the ABC Growth Fund declared a dollar per share dividend payable to holders of record on Wednesday, April 27th. Well, this is an open-end mutual fund. There is no secondary trading. So in an open-end mutual fund, the X date is typically the day after the record date. If this were a stock, if this was a stock, not a
It'd be
mutual
Tuesday.
fund, it would be the same indeed. It would be Wednesday, it would be the same. So see.
Oh, it'd be Wednesday. Okay.
Who benefits the most from a defined contribution plan?
Younger employees.
That's right. You were telling about our young lady, is 23 and starting her career. And, as an older person, I'd probably get fired because I would harass her, not sexually, but financially. You got to the 401k.
To
Are
the
you
401k.
stupid? You're doubling your money pre-tax. When are you going to do that? The coupon rate on a debt securities represents.
Oh, coupon rate. Well, the coupon rate
Doesn't change. That's
doesn't
right.
change. Is it B or D?
It is indeed,
The
principal.
interest rate, the issuer has the right to pay. The interest rate. Is it B?
Right on. And
The
that's
issuer has the right. Okay.
based on par, right? So if the interest rate six times $1,060.
Okay.
A customer owns 1,000 shares, subject to 1-for-3.
Oh, reverse stock.
Yeah, reverse. So you're
This
gonna.
is less slices of the pizza.
That's exactly right. Less slicers, but they're bigger slices.
Yeah. Yeah. Less slices, but bigger. Um, it's A.
Yeah, good job. I like that.
I know it sounds stupid, but it's
No,
like
no, I'm
and
gonna
the
steal it. I love it. I usually use something close to that, but I think like yours is a little more spot on than mine. I said the pizza is the same pizza, just now there's more slices or less slices. That's exactly right. Which the volume is part of the expense ratio of a mutual fund. I like this question because a lot of people get hung up on what the fund is paying versus what the investor is paying.
Oh, yeah. Is it the sales load
Well, remember the
or
customers.
B? Oh,
Yeah.
oh.
So I kind of like that question just
Which
because,
is the following part of the expense load
yeah.
of
So, A,
costs
B, and
incurred?
D are not paid
Oh,
by the fund. What's paid by that's paid by the client, right? So A, B, and C are called the load. The load is not paid by the mutual fund. The fund does pay the manager, the board of directors, all those kind of folks. Customer sells an 8% corporate bond for 102. They purchased the bond 1 year ago.
at par, $100.
Yeah. So
Okay,
what
hold on. Let
is
me
the
try to do
total?
this.
Yeah, I like it.
They purchased a
Customer
bond
sells it
at
at
par.
102.
So 8% of that would be $8.
And
No?
8% of 1,000 is $80.
Oh, it's 1,000 because it's a bond.
That's right.
80
So
bucks
there we
was,
go. So we
so
made
it would
80 in
be,
income. We made 80 in income.
yeah.
And so that 102 is 102% of par, par being 1,000. So that's 1,020. That's our sales proceeds.
Is it 10%?
Yeah, I think so, right? We made $80 and we made
Can you do
$20.
the math on this so I could just
Sure,
write it down?
absolutely, absolutely. So we first took the 1,000 and we said, yeah, that's important. And we said, you
It's a
first said,
bond.
yeah, because if that had been a preferred stock, you would have been correct. But it's not. So
Times
that's
8%,
$80.
80 bucks. Yep.
That's our income. So let's put that there. Let's put in boom. Now we have our cost basis. It says our cost basis was 1,000. I'm just saying cost basis and sales proceeds because I just want us to get a little more comfortable with test lingo and, kind of thing. So, I mean, that's not important to answer in this question, but, we refer to that as your cost basis. And then it says we sold it for 102. So that's 102% of par being 1,000.
Oh, 102%.
Yeah, we had been tested earlier and we answered correctly that bonds are priced as a percentage of par,
So
right? So I'm just
1,000,
and so boom, let's put that there. So we got to figure out what
102.
is our cost basis here, our sales proceeds. We'll put that in green. And that's going to be, if I do that on my calculator, 1,000.
It's 10,200, but like
There
10.
you go. Boom, 1,020. And so now I'm back in business. That's called my sales proceeds. And so now I'm going to compare that, it says, to my cost basis, right? So there's my sales proceeds and there's my cost basis. So you were correct. That means we made another 20 bucks there. So we made in total, now we're almost done. We made a total of $100. And so now we take the $100. To make the $100, we paid 1,000.
My God.
And so you are correct. That is indeed 10%.
So you took the 100 divided by, so it's 1,000.
Yeah. Remember what we made, income and price appreciation, right? So boom, we made here. Let me just get done here and then I'll go ahead and do all of it. But
Oh, 1,000's the denominator.
yeah, the 1,000 is yeah, the 1,000 is our cost basis. So it cost us $1,000 to make this money, right? That's what that cost us to make,
Cost basis. That's a good one.
right? So that's what it cost us to make the money. The money we made came from the income and the price appreciation. And now, like I said, we've had to do this now in this particular practice test 3 times. It's definitely there. So the two big ones have been current yield and total return. We should be prepared to do that on our SIE exam.
Current. Yeah, I'm going to take a bunch of Notman.
Yeah.
Yield. And what
Current
was it
yield.
else? What else?
This is called total return.
And total return. Okay.
Got to be able to do that. And then we had one. You did a pretty good job, but we didn't ask you to do the math. I could have asked you to do the math on that split. In other words, it was a $90 stock or $30 stock, and now you tell me it's a $90 stock. 12
Okay.
years ago, your client purchased $150,000 of GO bonds. maturing in 50 years from now and callable in 6 months. Oh my God. Interest rates have gone down over the last 5 years. Which of these should your client do? Kind of a,
A, definitely could be called.
yeah, we should definitely. That's exactly right. In fact, I would be kind of saying, why did we buy these? He bought them by par, maturing in 15, callable in 6 months. I mean, I actually, as a compliance officer, can't think this is kind of a red flag. But you're
I think
absolutely right. We should
I think they're
tell them
trading at a small premium.
that. 1 and 4. Yeah, good job. That's a judgment question. I would give you more points right for that one.
Good. I have good judgment.
Yeah, that was a tough one. Any sale of securities outside of an associated person's employing firm's regular business is recognized as,
A.
yeah, well, is it an outside business activity or a private?
Oh, any sale of securities.
Yeah, if it was just something, anything, generic, I would
A
acknowledge it.
private transaction.
Yeah, that's called selling away. I would know what that's
Selling.
called.
Oh yeah, selling away.
Very much
Isn't
attested.
it prohibited?
Well, it's not if you have permission, but very unlikely, right? That
Okay.
somebody's going to
What
permission.
other question could they ask about
Selling
selling
away would
away?
be the way they phrase selling away. An associated person sells an investment without
Approval.
right? Without, if you have approval, you can do it. I don't think it's likely to be forthcoming, but records relating to CTRs must be retained for, well, money laundering records are,
5 years.
boom, right above that in the SAR. All right, so let's submit. I think we talked about most of these along the way. As I said, you're ready to go, my friend. You are ready to go. Now, some of these I
Take a
have to
photo of that. But I feel like,
risk. Okay, let's see. Did we talk? I think we talked about these. 20%. Customer purchased 100 shares for
can you
20.
send me this exam?
I think I can. I can send you. You mean
Just
the
like the
app?
PDF? Yeah, yeah, just so I can
Let
go.
me, let
Because
me
what I
see.
think is really helpful is
Hold
that
on.
you
Hold
go.
on. Hold on, because I can, but I got to be home. Let's see. I think I can do it. Let's see.
Yeah, print.
Print. But
And then
I
you could
don't want it to
PDF
tell
it.
it to print. I want to tell it to do it a PDF.
Well, you could print right into a PDF.
I think so.
Yeah,
Let me
that's what I usually do.
see. Print. Okay, hold on. Let me go back. Boom. Well, first, let me stop recording. So I think we talked about, let's review this first. Is that the one we did, right? So here's the one we did right here, simulated exam. Review. Let's review it first and I'll figure. I've done it before. But I did it before I had somebody who was pretty technically helping me. Let's see. We talked about that one. 1 and 4. Yeah, okay, we talked about that. I'm just making sure there's any. Yeah, that was a bad miss. You didn't have any bad misses. That was a bad one. Boom. We talked about that. Okay, so now let me see if I can send this to you. Let me first